Hello everybody. The last time we spoke, we had moved a considerable amount of our money from being invested domestically and shifted some of it earlier to international. We had done that with Europe here back on 210, and then after that we reduced this and increased our holdings of cash considerably, and that was back on early April, and since then we've been waiting to see what these markets wanted to do, and I think we're farther enough along now to decide that it's probably worth putting some of that money back into ETFs for stock equity exposure. But again, as I said back then, the interest is not to do that domestically, but to do that internationally. And right now, it doesn't make sense to go after the EZU. We're already up 7.5% on it since entering it back on February. And now the idea is let's look at Asia. Now, the portfolio aggressive, you can see, we've got about 33% of the money's in cash. Over in the balanced portfolio, we actually have quite a bit more in cash. And domestically, even though there is the potential for a larger decline to potentially take place, so far it hasn't actualized. And until we see some actualization of that, it's probably worth our efforts to stay a little bit more invested, keep some money on the sideline here just in case we do get hit, and use that money to go into international stocks, and maybe even come back into the domestic stocks if they get hit reasonably hard. So what are we looking at then in terms of international? Well, it's Asia. And in Asia, of course, it's the EEM. It's the Emerging Markets ETF. It had pulled back fairly decently, about a $2 pullback, which is, equivalent to about almost 5% or so. It's bounced back up since then. It's only down about 2.5. We did have some volume here, and I'm looking on the daily chart. But there's a nice pattern going on here. It's into the support zone. It's probably not a bad place to make an initial purchase. If we look at it on the weekly, had a nice push up, didn't have a lot of volume associated with it. It's come back, in neoclassical terms, to do a retest regenerate. So in other words, when you break some prior high, you come back in and you try to test into that to see if you can break it back down. That test has been on lighter volume than that prior high, and certainly a little bit lighter volume than the breakout bar, which was this bar. And so when all those combined, it says, hey, this is not a bad setup on this time frame, which is the weekly time frame. And if we look at it on the monthly time frame, here it's been in a range consolidation for a very long period of time. It's actually been for, most of, 4 years now? And when I say most of, if we look at it, almost all the price behavior is inside here, outside this little small dip in this area where it traded above it once before. So if it were to get above this area, we could certainly see it test these highs again and potentially set up a larger range, that would be equivalent to the one that's back down here. So, when I look at this, it's like, well, there's decent upside potential if this gets going. And of course, that assumes that the world equities are going to do okay. And we don't know that yet, but it's not a bad assumption at this point to think that they're still going to do okay. Now, when you hear emerging markets, the first thing you think is, oh, well, that's kind of dangerous. And in a way, it is. If you look at the country breakdown, almost half the fund is in Asia. So you got China, Indonesia, South Korea, Taiwan. That's about half of it. The next ones are South Africa, Brazil, and India, Mexico down here, and a couple others. But the majority of the fund is in Asia. And so, I know that, the first thought I have, and probably you, is, oh, that's pretty risky. Well, yeah, maybe it's a little risky, but if we look at it a little bit farther here, the sector breakdown is really technology and financial services. So about almost half again of the fund is in, somewhat, um, I wouldn't say non-aggressive, but not as aggressive. These are growth. Certainly technology is growth. And in Asia, financial services is growth as well. So it's top weighted in these two, but those two, especially financial services, probably shall benefit from what's going on in those countries. And then the other thing to look at is, what is the weighting structure inside of it in terms of the stocks that are in it. And if we just take the top, 20 or so here, they're fairly equal weighted. I mean, you're down to, less than 1% of the portfolio when you get down to about the 10th item on there. So it's not as if one stock, if something happens to one particular stock, it's going to kill this whole ETF. It's more equally weighted in that. There's something like, there's 43 pages of this. So we're talking about 700, 800 stocks. So that's what it looks like. And so what I would like to show you next is, why do I think now is the time? And we looked at the EEM, but if we look at those countries inside the EEM, starting with China, and we're talking about the heavily weighted ones, China has had a huge run up, and even though it has, just recently, this thing has pulled back about 10%. And that 10% pullback after about a 45% run up over the year, is a decent sized pullback. And the thing that I would note here is that, the volume's coming back a lot less than the volumes were as it was going up and hitting the highs. Left volume at the highs. I like the way this is set up on the way back. I think China, and it's, China of course is a large piece of the weighting. I think China looks pretty good. Taiwan is the other one. If we look at Taiwan, Taiwan had pushed up with a lot of volume, has also come back with less volume. On the daily, it actually has broken under that retest regenerate. It may come all the way back into this next one. That was after a nice big spike up. If we look at it on the weekly, it's just coming back towards that retest regen. And again, volume's lighter as it comes back. South Korea is another heavy weighting inside this ETF. You can see South Korea had a huge run up itself. What is this, from like 19 up to 21? So, a good 10% run higher. Now it's pulling back. It's pulled back again. Note how these things are coming back. Volume's shrinking on the way back compared to the volume on the way up. I like the way this one looks. And so, South Korea looks like it can add, some juice to this ETF. And finally, if I look over at, one of the countries we didn't talk about, which is Brazil. Brazil is having a nice big run up, although I suspect this is going to pull back. If we look at it on the weekly, it's come back up towards the highs. It too, doesn't look bad. Some sort of a large range trade. It's about 7% of the ETF, so you've got this large range, and about halfway in it is where I would expect it to try to pull back to. And so when it does, again, it can come back up and test the tops. So when I look at the internals of the EEM in terms of the country charts, the country indexes, they don't look bad. 3 out of 4 have already pulled back. This one's in a nice range trade, and we're looking at about 45% of that ETF. And so when I think about it from that perspective, it looks to me like it has more room to run, and now is not a bad time to be putting some money into it. So what we're going to do as a result of that is, here in the aggressive portfolio, we're going to take some of this cash that we have laying around, and in this case we've got about 33%. We're going to take 8% of it and put it into the EEM, to the emerging markets. Give us more balance overseas. That would bring our weighting up overseas to a little bit more than a third of the portfolio. Bring our cash down to about 25%. And then we'd have a nice weighting, not just domestically, but also overseas. And if the EEM pulls back farther, then we can allocate more cash to it. Of course, if it runs higher, then we'll just have to find the next good point to add some more cash to it. If we look over at the balanced portfolio, let me grab that one. Here we actually have a lot more cash, and in this case, we're going to take some of that cash and put it into the EEM as well. And in this case, since we have such a large weighting of cash, we're going to put 10% of it, equal to the amount that we have in Europe, and put that into the portfolio as well. So I wanted to give you this quick video, bring you up to date with what we're doing and why we're doing it, and acclimate you a little bit to what the EEM is and why it's one of the ETFs we do look at from a portfolio perspective when we're looking for equity exposure. Okay, that's where we're at. We're going to do that effective at the end of the day, Monday, and that will be the 11th of May. Okay? All right. Thanks a lot. I'll see you next time.